Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is July 23rd, 2012 and we are currently looking at price action on the 10-minute chart. And if you look to the left, you can see this yellow vertical line drawn in, which it actually marks the start of today's trading session. And as you can see, when our session opened for the day, we fell, well, really price gapped lower about 36 pips to the downside. And throughout the first half of the trading day, there was this bearish momentum, and this moved lower, and price actually reached a new low for the year at 2068. And this move lower came as a result of just some more disturbing news coming out of Europe in regards to Spain's financial situation. Of course, Spain's debt situation is a lot worse than most had expected. A number of regions requested financial support from the central government in Madrid, and this caused yields to skyrocket both on the shorter end of the curve and also the long end of the curve within the Spanish debt market. So this news caused US dollar strength due to capital flight from the Eurozone towards more reliable safe havens like the US dollar. So then we saw the euro weaken and the US dollar strengthen on this news coming out of Europe and Spain. So the euro fell and found support at 2067. And it was at this support that sentiment began to change, and we began to see this rally kick in during the second half of the trading day. There was news that that Russia was going to maintain their euro reserve levels, so this also added to the risk appetite that we see here. But we also heard that institutions like the Swiss National Bank and other sovereigns were stepping in to buy the euro near these support levels and to prop the euro higher. And there was also speculation that the ECB will have to step in considering the high borrowing costs in many of the Eurozone peripheral nations, and that the ECB would have to step in and do something more drastic like a 3-year LTRO. So this caused this rally that we see in our pair, and the pair had rallied from support up to a new session high here at 2145, where it found resistance for the day. But prior to the actual close for the day, we heard an announcement. You can see here that we see this sharp drop in price, and this came as a result of an announcement from Moody that they had lowered their outlook on 3 AAA nations within the Eurozone. They lowered their outlook on Germany, the Netherlands, and Luxembourg. And this was due to just more increased uncertainty over the whole Eurozone debt crisis, and also the possibility of a potential Greek exit from the Eurozone. So of course we see this strong selling kick back in, and as a result price fell, and actually our trading session ended slightly below our opening price of 21.21. So then of course you can see how for the day we've been pretty flat and neutral, and we're sort of where we sort of closed where we started for today. But it appears right now that this risk aversion is going to continue throughout the Asian session, and we may continue to see further selling on this news that came out from Moody. So then if price breaks below this low here at 2108, then we should expect price to actually retest and find support near our weekly support level here, our weekly S1 level here at 2090. This whole 2090 zone, we should expect that to be the next level of support if price breaks below this low here at 2108. And if price breaks below this support here, then we can expect further stops to be triggered and bearish momentum to pick up and carry our price towards our new yearly low at 2068. And if it breaks below our new yearly low here at 2068, then we can expect further selling and further bearish momentum to kick in, and for price to test the 2020 levels in this whole 2020 region and find support there. And from there, if it breaks through, we can expect price to find support at this 2000 psychological zone here. So then that's if this bearish momentum continues throughout the next trading session. But if price breaks above our session high here at 2145, we may see price test resistance at 2167. And if it breaks past this level, we can expect more stops to be triggered and additional bullish momentum to kick in, and for price to move up and test this 2190 zone. So then that's what we can expect during our next trading session. Of course, we got to observe price action and wait for the Tokyo Open. But that's pretty much it for my technical analysis review for today. And I will be talking to you guys later. You guys have a wonderful day. Okay, then, bye.